Okay, what are source documents? Source documents serve various purposes. First, they record, they give evidence of the happening of a financial transaction. Suppose you want to record a financial transaction. Your boss comes to you and tells you that he's bought computers, that you should record it. No. Financial transactions are not recorded based on word of mouth or some wild rumor or gossip. Financial transaction is recorded based on hard evidence, and this is normally in the form of source documents. These are the documents that show proof that a transaction took place. For obvious reasons, you will not trust the word of mouth. Now, for us to understand this concept of source documents, it's good to review the procurement process. What is the procurement process? The steps taken for an organization to buy any item that they need. So first in the process is requisition. The head of the department who needs an item will request. It's called a requisition. Then the head of department will take this requisition to the procurement office. So when the procurement office looks at this requisition, then they will prepare a local purchase order, something called an LPO. So when the LPO is prepared, then normally a financial controller approves this LPO and it is sent to a supplier. So if a chief accountant wants computers, he prepares a requisition. And he takes the requisition to the procurement office. The procurement office prepares a local purchase order to a supplier. And when the supplier receives this LPO, then they arrange to deliver the computers, the items that were ordered for. So when they deliver these items, then they prepare two documents. One is called a delivery note. A delivery note basically is just a document that shows that items were delivered. There's no financial element at all. It just shows we delivered two computers to Unga Limited on 3rd of December 2019, and it was received by so and so. So that is a delivery note, no financial element. And then they also prepare an invoice. An invoice is like a bill. Now an invoice shows the financial aspect of the items delivered. So if there are two computers, they will say each at 50,000, total 100,000, to be paid within 30 days. So that is the credit period. So an invoice now shows items delivered, date, details, amount, and the credit period. So the third stage is succeeded by cash payment. So after you receive the invoice and the delivery note, now you pay later on. So let me review. There are 4 steps. Number 1, requisition. Number 2, LPO. Number 3, delivery note and or invoice. And then the third one is cash payment. Okay, so when should a financial transaction be recorded in this process? When you request for something, there's no financial transaction. It may not be approved. An LP may not even be prepared. So there's no financial transaction. There's no abiding financial transaction. What about when you order, when you prepare an LPO? When you prepare an LPO, again, there is no financial transaction. If I order 2 computers from Sights and Sounds in Nairobi, I may cancel this order before they supply. So there's no abiding financial transaction. It can still be cancelled. What about when I receive the delivery note? Delivery note is also not an evidence because there's no financial aspect. Though I have received the goods and there is delivery of items, yet it is not a financial transaction because a delivery note that does not have the financial aspect of a transaction. But when I receive an invoice, then that is now a financial transaction. I know the amount that I should pay, the item that I bought, the person that I should pay. So an invoice is a source document. Now, accrual concept says that we recognize expenses when we incur them, not when we pay for them. So here we have already incurred the expense. If it is an asset, we already have a binding agreement to pay. So an invoice is a legit source document. And then finally the cash. So if the cash comes before an invoice, then the cash receipt will be a source document. But normally cash comes after the invoice. So normally invoice is the major source document. But even when you record the transaction, you should also record all the documents that were used to support this transaction. So when you record purchase of a computer worth 50,000, you should attach the requisition, you attach the LPO, and you attach the invoice. Because for audit trail, if an auditor wants to know why was this computer bought, who approved it, who requested for it, so you need to attach all these three documents. This one transaction, you need to attach the requisition, you need to attach the LPO, you need to attach the invoice. Without that, then there can be some malfeasance. Something can be ordered which was not needed. Something can be ordered which was not requested. Something can be ordered for which there was no signature of any approval or authorization. So all these are important in the accounting process. They form an important aspect of the audit trail. They show evidence of a transaction, and for future reference, they are very important. Now, I'll give you some other examples of source documents. When you buy something in cash, something that doesn't have to go through the standard procurement process. When you're traveling and you pay for a taxi, there'll be no requisition, there'll be no LPO, but again you will have the cash receipt. So it is not always that the source document is the invoice. Sometimes it is the cash receipt only for certain situations. When you hire a worker, there's no LPO, there's no requisition, but there's that employment contract. So the employment contract is the source document. So it doesn't have to be invoice or cash receipt. Sometimes it is the employment letter. So it depends with the nature of the transaction. It is situational. So it is not always that you will get the invoice. Now, the other source documents that are important, like a debit note and a credit note. A debit note is basically a document that corrects an undercharge. So if you have been undercharged, let me say you undercharged, you are a business entrepreneur and you undercharged a client, then what you will prepare is a debit note to the client. So when the client receives this debit note, then he will record this because this is a source document for a financial transaction. So let me say that you bought a computer of 25,000 from Safaricom, and when you received the invoice, you recorded this as asset, and you recorded a liability of computer payable because you have not paid. So there was asset and there was computer payable. So you recorded this financial transaction. Later on, 1 week later, you receive a debit note of 10,000. Safaricom realizes that they undercharged you. So this debit note, you will use it to again record the cost of this computer in the books. You will increase it. You will add this 10,000 as the cost of this computer. So you will record and add this 10,000 into the cost of the computer. So this debit note is correcting the previous undercharge. What about a credit note? A credit note corrects an overcharge. So if, let me say, Safaricom charged you 40,000 and you recorded this in your financial books, Then later on, Safaricom gives you a credit note of 5,000. It means they had overcharged you, so you should reduce this amount. So if you had recorded 50,000, you should reduce it by 5,000 using the credit note as the source document. So a debit note is a correction of an undercharge. A credit note is a correction of an overcharge. Basically, an organization would love credit notes and would not really like debit notes because debit notes increases their expenses. Credit notes reduce their expenses. So basically, that is all about source documents. Very important. You understand the procurement process. You understand, you make sure you have some documents, not just one document, but documents to back up a transaction. These documents are what are called source documents. I hope you enjoyed this explanation. Thank you and have a good day.